Tired of watching YouTube strategies that never work? You try one, it looks promising, they show a few trades, some flashy indicators, and boom, you're hyped. But then you go live or even demo, and you're just losing over and over. Well, I found a strategy that needs just 3 things. No paid indicators, no complicated systems, just market structure, RSI, and liquidity grabs. I actually tested this thing, ran it on multiple pairs across different time frames and in all kinds of market conditions, and I was consistently getting around an 80% win rate. We're gonna break this strategy down into 4 simple parts. In the first 3, I'll teach you the key concepts that make this strategy so powerful. And in part 4, we'll put it all together and you'll see exactly how to catch sniper entries with confidence. Let's start with the first core piece, market structure. If price is forming higher highs and higher lows, we're in an uptrend. We look to buy. If it's forming lower highs and lower lows, it's a downtrend, and we look to sell. Then comes the break of structure, or BOS. This happens when price breaks a key high or low. After the BOS, we look for the order block, that last candle before the move, where big players enter. Price often pulls back to this zone, and that's where we strike. Let it tap the zone, wait for rejection, and boom. Now we're going to be moving on to part 2, liquidity. This is where things get interesting. The market loves to hunt stop losses, and that's what liquidity is all about. It's not just random spikes, it's smart money grabbing orders from retail traders like us. You'll often see price push above a recent high or below a clean low, only to immediately reverse. That's a liquidity grab.
Nice.
Now what we got to do is wait for price to take out a prominent low or high. That's your signal to get ready for a reversal. Look at this example. Price dips just below the previous low, grabs the liquidity, and then boom, immediate reversal. Classic liquidity grab. We're not out here chasing price. We wait for it to show its hand, take out that low, and then we strike with confidence. Once you learn to catch these setups, everything changes. All right, now we're moving on to part 3, RSI. Now you're going to want to head over to the indicators tab, type in RSI, and select this one right here, Relative Strength Index. Once it's added to your chart, click on the settings icon. Now this part is important. You need to copy my exact settings. I'm serious. Don't skip this. These tweaks are what make the RSI actually work for this strategy. So here's how it works. When the RSI line dips down near the 30 level, that's when you start watching for buys. Price is considered oversold, and when it climbs up near 70, you look for sells. It's overbought, and that's your reversal zone. All right, now that the basics of RSI are out of the way, let's get into the juicy part, divergence. So here's how it works. When the chart is making a lower low, but RSI is showing a higher low, that's a hidden bullish reversal. Price might be gearing up to shoot back up. Now, flip that. If the price is making a higher high, but RSI is printing a lower high, that's a bearish reversal coming. Get ready to catch that move down. Now, over to the final piece. This is where everything we've learned comes together. Market structure, liquidity, and RSI. If you've made it this far, you're about to see how powerful this strategy really is when all 3 elements align. First up, let's identify the market structure. In this case, we are clearly switching to an uptrend, and right here, we can see a break of structure. That tells us momentum is shifting, and the trend is likely to continue upward. Now let's find the order block. It's right here at this last down candle before the push-up. That zone becomes our high probability entry point. Next, we look for liquidity in the market, and boom, right there, we've got a clean sweep of the previous low. That's price taking out stop losses. Exactly what the banks and big players do before reversing the market. Then, we jump over to RSI for confirmation. Is it sitting low? Yup, that's already a strong sign. If it's showing bullish divergence, even better. But even without it, this setup is still high quality. So we've got all 3 confirmations: structure, liquidity, and RSI. The stars have aligned, and this is where we strike. We're not just done yet. Getting the entry is just the beginning. You've still got to lock in those profits the smart way. So here's how we do it. For the stop loss, we're placing it just below the order block. That way, if the trade goes wrong, which shouldn't happen, we're out quickly, no big damage. And for take profit, we're aiming at the next major high, because price is most likely to reach that level before stalling or reversing. That's how you build a proper setup. Not just based on one signal, but a full confluence of confirmations. Wait, don't click off yet. Join my Discord server for free market updates and free signals. It's completely free. And until then, I'll see you in the next one.